Hi everyone, and welcome to the Buffett and Beyond Stock Selection Strategies. And remember, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. And we will teach you how to construct your own portfolio through the use of our podcasts, our daily market letters, our weekly video stock analysis, and our proprietary computer program. Hi folks, this is your host, Dr. Joseph Belmonte, along with Debbie, and that's Debbie with a Y, and all the questions she has from our listeners out there in investment land. The good.
Stocks that should be in our portfolio.
The bad.
Stocks that should be in somebody else's portfolio.
And the ugly.
Oh, stocks that should be in nobody's portfolio.
Okay, let's get on with some stocks. You'll see exactly how this method works and how we here at Buffett and Beyond set the investing parameters so that you, all of you, can outperform most of the professional money managers out there in investment land. Hi, Debbie. What do we have for today?
Well, hello, JB. Hello, everyone. We were asked about the semiconductor industry, which is indeed a cyclical industry and is certainly affected by the trade skirmishes going on between the U.S. and a good part of the rest of the world. The stock market frequently asked about in this industry is Advanced Micro Devices. And Advanced Micro Devices is a leading maker of integrated circuits. It produces microprocessors for desktop PCs, portable computers, and servers, and designs that are compatible with Windows apps. Also manufactures graphics processors through the ATI acquisition in 2006, and circuits for communications equipment. Foreign business accounts for 74% of sales, and it has 8,900 employees.
And there's one reason it's so cyclical, because of 74% of sales is overseas. Okay, let's go over to the net income first, and here's what we talk about cyclicality, is that look at these red numbers in here. This is when the company lost money, so how could you expect a company like this to be in one of our portfolios? Now, the thing is, in 2017, this company was coming off a loss and started making money, doubled it in 2018 this year, and is going to increase another 14% for 2019. But looking at this clean surplus ROE, folks, we see it's all over the place. And you know, our threshold for getting into our portfolio is 20%. So we do not like this company. However, just because we don't like it doesn't mean, and here's this chart, doesn't mean that this company just took off like a rocket. And this is a one-year chart, and so right in here it started moving about 4 months ago, and folks, it just rocketed to the top here because it's been making money. But now you're seeing it start to decline, and that's because 74% of the sales are from overseas. And guess what? We're having a little trade skirmish with China. And then looking at the 5-year return, you can see that when it just started making money, this company started going up, and then it took a year in hiatus right in here, and then all of a sudden off to the moon.
All right, now Broadcom Limited, formerly known as AVGO Technologies, designs, develops, and supplies a broad range of analog semiconductor devices, and its product portfolio includes radio frequency amplifiers, filters, front-end modules, and light-emitting diodes. And the company operates through 3 segments: wireless communications, wired infrastructure, and industrial and automotive electronics, and it has 14,000 employees.
Ooh, all right. Let's look at the numbers on AVGO, I should say, on Broadcom. And looking at that net income right away, we see that in 2016, here's the cyclicality of this industry, folks. It was making in 2015 $4.95. 2016, it was losing almost $4 a share. 2017, then it was making $4 a share. This is insanity. And look at this 2018 number, and why these semiconductor stocks took off to the moon is because this thing just went from $4 a share of net income to $27 a share this year, and next year is going to $8 a share. Now, don't think this net income is going down, because $8 a share, or I should say $8.15 a share projected for 2019, is still double this great 2017 number. So you can see the clean surplus return on equity, that is our magic number, is just all over the place. And so we really don't know how to value these stocks, but when we come over here and look at revenue growth, we still see that revenue growth is going to be 10% for next year, or 10.3% for 2019. And that's a pretty good revenue growth there, folks. So with the Broadcom ROE all over the place, we know it's making money. And let us look at this past 1 year. It is underperforming the S&P 500. Wow, record earnings, it is underperforming. Well, let's look at 5 years, and we can see that this company just started moving along very, very nicely, is up about 480%, while the market is up only 80%. And this is over the past 5 years. So we can see that, yeah, there's cyclicality in that, and then we don't know how to value these stocks. And even though this company made all kinds of money this year, like 5 times more, 6 times more than it did the year before, we see that this company has done not much in this year.
Alrighty, up now we have NVIDIA. And NVIDIA is a leading developer of 3D graphics and multimedia processing technology used in PCs, gaming consoles, and other devices. Customers include Microsoft, HP, Dell, Fujitsu, Siemens, NEC, Sony, Toshiba, Apple, and other system integrators.
That's a lot of people.
Let's say it again. I'm not going to. And production is outsourced to Taiwan Semiconductor and IBM. International sales account for 87% of revenues, and it has about 8,100 employees.
Yeah, and just think, folks, and this is what Debbie said in the beginning of the program, is that we're having a little tariff skirmish with most of the world, and when your sales account for 87% of revenues, then you have problems when countries start throwing tariffs on your products and you don't know how to price, and then all of a sudden sales slow down, sales pick up, and it just drives you a little bit crazy. And people investing in these stocks saying, well, if we're having this trade war, why buy these companies? And we saw that in Broadcom, is that this stock flattened out, even though it had record earnings. And let's see what NVIDIA has done this past year. But first, we're going to look at that ROE, and this ROE looks much better than the other stocks. So we like this very, very consistent rising ROE, which the market likes very, very much. But I want to show you the cyclicality. And this is why I have a lot of years in here. In 2007, it made $1.31 a share. Then in 2008, when we started going into a recession, and the recession really hit in 2009, you can see this company still making money, but hardly making money. And I want to show you one thing. It made $1.31 in 2007. It didn't come back to that level until 2016, when it made $2.57. So you can see there was a long dry spell in here. So had you bought in 2007 when this stock was hot, you would have waited for a long time. And let us look at the past 12 months of this stock, and you can see it's doing very nice. But look how volatile this thing is. It's up, it's down, it's all over the place. It'll make you dizzy. But still, it's up 55%, while the market is up about 15%. But I want to show you a few things about cyclicality, folks. In the past 5 years, you could see this stock was doing nothing for the first 2 years, and then all of a sudden it took out. And I showed you the good constant growth in that ROE over the past several years, and it sure shows up in this stock. It looks very, very nice over a 5-year period. In fact, this is absolutely crazy. I don't think I've ever seen a stock do this, up almost 1,800%, while the market is up 40 or 50%. I can't even fathom that, but I'm going to show you something that will in turn scare you. Let us look at these numbers back in here again, back in 2007, then we went into recession, 2008, and 2009. And let us go to a chart, and this is 2007 and 2008. And this is October of 2007. And folks, this stock broke before the market did. You could see the market was going along, came down again, and then went flat. And this is May of 2008. Now, from here to here, the market had not yet broken. But from here to here, this stock was down 55%. It went from $40 a share down to $18 a share right in here. And then when the market broke, this stock did another break, and it went all the way down to $5 a share. This is what we're talking about. You have to be careful of cyclical stocks because they start to go down before the market breaks, and you don't have a chance because nobody in 2007 was talking about a recession. We were talking about Yahoo, the market's going to the sky, and this stock started to break, and that's because numbers were starting to come out, or I should say projections were coming out for 2008. The market did not like them. The smart market participants knew this stock was cyclical, and they wanted to get out quickly, and they did, folks. So from $40 a share all the way down to $5 a share, this stock was down 87%. The market itself fell 40%. But this cyclical stock was down twice as much as the market. And folks, what do you do when your portfolio is down 30, 40, 50, 60, 70, 80%? Do you sell or do you buy? And boy, oh boy, you don't have much money left in order to buy. And that's why we want you to be very careful of cyclical stocks.
Okay, then. Well, I think we about just covered all the questions sent in by our listeners out there in investment land. And remember, folks, we're here to answer your questions, not only about individual stocks, but also about the stock market in general. So keep the questions coming, and who knows, we may even answer a question or two you didn't even know you had.
Yeah, and folks, don't forget, if you want to receive a full month of all our letters and complete access to our computer program, just to go to our site and sign up. And remember, all you need to manage your own portfolio, and it's free.
Free!
So just go to BuffettandBeyond.com, and Buffett is spelled with 2 F's and 2 T's, and that's BuffettandBeyond.com. Okay, folks, we had a great day today.
And tomorrow will be even better.
All right, bye, folks. We'll see you next time.
Bye, everyone.
And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. We've had a good week, folks, and here's hoping that next week will be even better. You have a safe weekend, and we will see you next time.